We are joined by Mihir Vora, who's the CI of Trust Mutual Fund, joining us now. Mihir, thank you so much for taking out the time and speaking with us at NDTV Profit. My first question to you is, what does this 50% Trump tariff actually mean for India? Because, this is not the first time that, Trump has, come out and done something irrational.
See, 50% is clearly not sustainable. It pretty much means a lot of items which are under that 50% bracket will become uncompetitive, especially given that most of those items are, items which other countries like Vietnam, Cambodia, China, etc. are making. So the relative advantage that India had with some of those countries before this 25% would be gone. So it pretty much, I think, we should treat it as a negotiation tactic. 50% in some of the items that we are talking about means India becomes pretty much uncompetitive. So it's definitely not an outcome that we want. Having said that, there are certain items like pharmaceuticals, electronics, etc., which are still exempt from the higher duties. But overall, it's not a good situation to be in.
Right, and as you rightly mentioned, this is more of a negotiation tactic. But what's the probability, knowing Trump and his past, that this is the final verdict?
No, absolutely. Unless both countries have decided that we don't want relations, this has to be negotiated. I don't think India can have us. I mean, what would it say about India-US relations if India has a duty which is greater than that of China or Pakistan? That would say a lot about what the equation between India and the US is, and the two largest democracies in the world certainly don't want to be seen as not on friendly terms. So I think 20 days is a good time. It's a good window for negotiations, and I think that's how we should consider this. It's more of a pressure tactic, a negotiation tactic, rather than a final outcome.
Absolutely. I wanted to understand with regards to everything that's happening, where does India stand? Because considering this is just a negotiation tactic, and there is UK FTA, which was a huge success, and a lot of exports that we do right now to the US might be sent to UK now. It might happen, right? So how are you reading that, and then the impact on India overall?
See, it all depends on what the final contours are, and it's not only India tariffs alone, it's India versus some other countries. So as long as two countries are both at 25%, we are not at a relative disadvantage. But if we are at 50 and the other countries at 25, then obviously we are at a relative disadvantage. So it's a complex situation. I don't think we should just look at the absolute numbers, because tariffs are going up for everyone, right? For Japan, it may be 15%. For India, it may end up at 20-25%. But relatively speaking, are we better off than before or not? That's what we need to figure out, especially versus countries like Mexico, Vietnam, Cambodia, Bangladesh, China, Philippines. Those are the countries where we are competing on labor-intensive sectors. Right, so we need to benchmark ourselves with countries which have labor-intensive competition versus India, sectors like textiles, footwear, some amount of electronics assembly. So as long as we are not worse off than those, we can still kind of bear it. But if we are at a great disadvantage versus China or Vietnam, that would be a problem.
All right, considering everything, do you think this is the right time to go full in when it comes to Trump-proof stocks? Is that the right approach?
No, I would kind of stagger it out. As I said, I'm not very bearish about this news, but I'm not very bullish, because as it is, the recovery is tentative. So what we want to do some things in a staggered way rather than going all in one shot.
Understood. And for someone who is sitting on dry powder right now, which sector should one deploy their money in, or should they wait for a while?
So as I said, do it in a staggered way. No need to go all out on one day. But if there's a sharp decline in the market, suppose the market in a week goes down by 3, 4, 5, 6%, then you can accelerate the deployment. But if the markets are down only 0.5%, 1%, then you can stagger it out. Because as I said, we want to see data points apart from exports also to pick up, like banking, credit, etc. Structurally, I would still continue to be bullish on the domestic sectors, because in spite of all this, India will still go at 6% plus. which is still better than most of the economies in the world. So most of the sectors that are domestic linked, like the financials, like the industrials, capital goods, government spending linked segments, I think if the slowdown happens or if the exports do get hit, government will come out with incentives, further spending by the government on infrastructure. So those domestic sectors will continue to benefit. And of course, if there's a favorable outcome on the exports front, then the sectors like textiles, etc., will come back into favor.
All right, Mihir, we'll leave you at that. Thank you so much for taking out the time and speaking with us at NDTV Profit.